Hey guys, welcome to the Proving Ground Mastermind. We're going to get started here in just a couple minutes. Let me know if you can see my screen and if you can hear me. Awesome. Thank you, Brad. Appreciate it. Did you try Passport? You know what I think it is? It's the hologram on your thing, on your ID. Did you try Passport? That's what I would try. Unbelievable, dude. The heck? It's like, what do they want? Yeah. None of them? Not even the other documents? Oh, that's weird. Did you try scanning that one? Golly. If you guys have any questions, feel free to chat them in. We've got about 3 minutes before we get started here. Good morning, Jay. Good to see you on. Hey, Calvin, good morning. All right, guys, we're going to go to get started. Appreciate you guys being here. Okay, Reed, I see the room with DTS, no sound or person. New, so I know I'm doing something wrong. All right, press the play button. Reed. Hang on, guys. Let me try to get Reed on here. Or refresh the screen. Let me know if that works. All right. Well, Reed tries to get that worked out. If you guys notice that he chats in and I don't, try to help him out there. So what we're going to do today is last week we talked about pressure, and you guys seem to really enjoy that, and I told you I wanted to follow that up and look at some of the other indicators as well and try to do the same thing. And there are a lot of other nuances within these indicators that we might not be able to cover on any one of these sessions, but we want to start with just kind of the baseline, just the foundation, right? All right, Reed, awesome, welcome. So the pressure we looked at last week, we looked at when it crosses above or below, right? Green crosses above red or below red, or when they're both pointed up or when they're both pointed down, and positive convergence versus negative convergence, and so on and so forth. So today we're going to talk about TNTs. Now this one's a little more difficult because I'll tell you right now that most people think that TNTs are the fastest to react. That they're going to give you insight faster than any other indicator. When you're looking at the indicators from a reactive standpoint, that is true. Reactive meaning they're pointed in a direction, you trade in that direction. From a reactive standpoint, the TNTs are going to be the leading indicator. But when you're using them predictively, they're not going to be as leading. Not because they're not quick to pick up those particular movements, but mainly because their particular design is to use them more on a reactive basis, which is why a lot of people like the TNTs, because they're pretty cut and dry, right? They point in a direction, with the exception of the fact that two of the lines are inverse and two of the lines are directional. Whatever direction they're pointed is usually good, right? Plus, when you add the value of the thick orange, it really helps to step that up. I know some of you have tried adding the value of the blue dotted, and you realize that you can't really do that, right? Good morning, Paul. Thanks for joining us. Because it only gives you a 0, and every once in a while a -0, and part of that is the value is multiple decimal points from 0. But let's move on from there. We're going to look at just the TNTs. We're going to look at our 3 points flat out, and we're going to look at the different variations of getting 3 points, and which will show you, give you a lot of insight as to why we use why the 3-pointer has very stringent rules, and the half court for that matter. So let me pull this up. Give me 1 second. So what we're going to look for is just 3 points. It doesn't matter where the 3 points come from. We want 3 out of 4 or more. 3 points or more on the TNTs. And that's all we're going to look for at first, is just 3 points or more. And then we're going to evaluate other factors like pressure, or rather trend, maybe support and resistance, and also the value of the thick orange, post or pre-chomp, things like that. So we're going to try to look at as many of those variables as possible here as we go through this exercise, because I want you guys to see, kind of what is going to make a good pattern or signal or indication versus something that's not going to be as useful, or you don't want to put as much weight into, right? So let's find a random area, and I wanted to pick this together. So right now this is 125/2016. Let's just pull it forward. That looks good, 9/30/2016. So let's just start there, and I'm going to remove the candlesticks. And what we're going to do is we're just going to go through and we're going to make a line every time we have 3 of these indicators agreeing. Okay, so right now we have thick orange down, which is 1, and blue dotted and thick blue down, which is up. So that's 2 to the up, plus thin orange is up, so that's 3 to the up. So I'm going to mark that. Now thick orange is the only one that does not agree. Thick blue and blue dotted are pointed down, which mean up, and thin orange is up, which means up. So we've marked this as an up, and just bear with me, because like we said, we're just going to take any 3 out of 4 points that we see, we're going to mark them, and then we're going to go back and look at what would be better in those situations or worse in those situations, or whatever it may be. Okay. So here we have thick orange down, blue dotted down, or blue dotted up, which means down. Thin orange is up, which means up, and thick blue is down, which means up. So we have up, up, down, down, right? So we have 2 for 2. We do have a chomp for a down, but we don't have our 3, so we're not going to do anything with that. We're not going to mark it or anything. Okay, now we've got 3 down, thick orange, thin orange, blue dotted. So we've got blue dotted up, which means down, thin orange down, which means down, and thick orange down, which means down. So we got 3 out of 4 down right there as well. Let's go to the next. We got down, 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 and kind of down. So we got another one right there for a down. And let's look at this one, up. That's down, which means up, and that's up, which means up. So we're good. Plus we got a chomp. And we've got sideways, that's up, that's down, that's sideways, skip that one. There's up, down, so sideways there again. 2 ups, and that thick blue makes the third up, so we'll mark that for an up. And here we have 1, 2, nope, nothing there. Right here we have thick orange down, thin orange down, blue dotted up, and thick blue up. There's 4 out of 4 saying short. Flat, down, down, down. So all 3 of those are saying down. It's really soft and flat, but nonetheless. Right? Thick orange does not agree. Thin orange is down. Thick blue is up. Blue dotted is up. So we got 3 there. 2, 3 right there, right? Blue dotted, thick orange, thin orange. Thick blue is the only one that doesn't agree for a long. Okay. And then, let's see, 1, 2, 3. So we got another 3 right there. They do look kind of soft, right? The thin orange looks kind of soft nonetheless. Let's mark it. Okay, let's do about 3 more of these. So 1, let's see, 2, let's see, 1, 2, nope, nothing. We got 1, 2, 3. We got 3 there with the blue, thick blue. Blue dotted disagrees. And look at the thick orange value, but we're just looking for our 3 points. It doesn't matter what it looks like, just that 3 of these 4 lines are directional. 1, 2, 3. So we got 3 lines there as well. Again, blue dotted does not agree. Now we got 1, 2, 3, 4. We got 4, 4 right there. Thick orange is at -95, but again, we're just looking for 3 or more points. Let's do 1 more. 1, 2, and 3. There it is. All right, we got a ton of lines here. So let's go back to our first line, and let's see what we've got. So what we're going to do is we're going to throw our candlesticks back on. Apply. Okay. Now we're just going to look for, let's just say 3 pips, okay? 3 pips just for every single one of these, just 3 pips, because we're not using anything except for 3 out of 4 points on the TNT. Now, one of the first things that I learned when I learned about the TNT was that the blue dotted is the fastest, the thick orange is the second fastest, followed by the thin orange, and the laggard is the thick blue. Now, when you're using these reactively, that's the case. A lot of times, though, when you're using them predictively, the thick orange actually works a little more predictively than any of the other ones. A lot of times, but I would say it's a tie between thick orange and blue dotted a lot of times predictively. Reactively, blue dotted is going to win. So that's why in the 3-pointer we want for the thick orange and the blue dotted to be 2 out of the 3 points, and then one of the other lines could be the 3rd point, which is usually the thin orange is usually the 3rd point. It's very seldom that we see the thick blue be the 3rd point on anything. Ironically enough, in this instance, it is, right? We have 1, 2, and 3. Thin orange disagrees for a short. So this is thick orange disagrees. Thin orange is in agreement for a long, right? Because we got 2 and 3. Thick orange does not agree to the long. So right here we'd be looking for just 3 points, right? 3 pips. Not 3 points, sorry, 3 pips to the long side, up, right? Because thin orange is up, blue dotted and thick blue are down, which mean up. So there's 3 points there for 3 pips to the long side. And we get 13.9. We also draw down 9.4, but we would have got that, right? Okay. So let's go to our next one, and let's look at, here we go again, 3 points, thick orange, thin orange, blue dotted. They've already crossed and chopped. But we're looking at this as the 3 points that we need for a short, because thick orange is indicating short, thin orange is indicating short, blue dotted is indicating short because it's pointed up. So we're looking for just 3 pips to the short side. We adjust that. Barely moved anything to the short side. 2.5 pips, not enough for a 3-pip trade. Moved about 9.3 against. So again, with this, we don't know what we wouldn't speculate that it's 90%. So we probably first of all wouldn't want to take a 3-pip trade on just this. But again, we're looking at its foundation, just its baseline foundation. We're not looking at nuance or anything like that quite yet, like the negative 100 or the flat or anything like that. We're just looking at its baseline, just to baseline understand what this indicator does and how it reacts, right? And we're going to get into a little more detail as to how we can utilize it better here in just a moment. Okay, so if we were doing 80%, let's just say, we would only have like a 2 or 3 to 1, which means if we had a 3-pip take profit, that's only like a 6 or a 9-pip stop loss, which means we would have been out of that trade. We would have been stopped out of that trade. But let's just say we want to use other disciplines to try to get 5 pips out of it or more. Then we're looking at 10 or 15 pips a stop. So we, obviously technically still be in that trade. We would have gotten that trade at 5 pips, or rather, 5 pips on that one as well. So here we'd be looking for a short still. Here we'd be looking for another short, right? Thick orange is down, and blue dotted and thick blue are up, and thin orange is down. So all 4 are saying short from that point for 5. Right here, that went 12, which let's see, if we were using a 2 to 1, we'd be stopped out of that trade. 3 to 1, we'd still be alive. This one is still alive, and it only moved 2.1 in favor. And here now we have thick orange up, blue dotted down, and thin orange up. So we're actually looking for a long right there. We'd still be stuck in these two. And that long only went 4.8, not enough for a 5-pip trade. And we're still alive in most of those. 14.5, almost stopped out of that one. So this is that would be a stop for that one. That one would be out. This one would be pretty close to out. And this one, which we said was long, would have taken profit. So you can see that, those 2 outs right there are 3 times the size of the win. So we'd be break even right now because we won this one, lost that one, and then won this one. So we're like 2 for 2, right? 2 winners, 2 losers. Which actually means we would be at a loss because the 2 winners are worth 10 and the 2 losers are combined are going to be worth, 30, right? So we're 20 pips upside down right now. Again, you got to remember the math there. All right, so let's look back here, or let's go here and look at this one. Thick orange, thin orange up, and thick blue down. So that's 3 for a long trade. So we'd be looking for a long. It looks like there was a gap right there. So probably the weekend, and then came back in. So we wouldn't necessarily use that, especially on a 60-minute. Nonetheless, let's just see what happens. And it moves about 4.6, so not enough to the long side. Moved about 5.7 short, and then 6.9. So right here we have a short. We'd be looking for a short, right? Thick, thin, pointed down, blue dotted and thick blue pointed up. So we'd be looking for that short, right? And that one moved about 5.7, not enough for a 5-pip. Not enough for a 5-pip, but pretty close. This one right here would be 12.6 upside down. And then this one right here is another short, right? 2 up, 1 down. Blue dotted, thick blue, and thin orange agreeing to the short, to the sell side. And that moves 4.6, which actually would have done this trade in. Nope, not yet. Would have done this trade good. 6.2 would have taken profit. This one would still be active, but upside down 5.9. So you see it's kind of all over the place. We could do 3 pips. I was just saying if we did 3 pips, Steven, that means that we'd have to theoretically use like a 9-pip stop. So I was actually just trying to give it a break here. But if we said 3, these would be okay. But nonetheless, on the ones that did not pan out, if they didn't pan out to be 90%, you would end up upside down on all the losers. Yeah, there would definitely be more winners for this small group right here. Yeah, absolutely. And if it was, so just based on our experience, we know that this is not 90%, because we've back tested it. I mean, right here we're looking at maybe 2 days, where when we back tested it, at least the 3-pointer in the half court, we did like 3 years. So we know it's not 90%. So matter of fact, the 3-pointer, even with all its parameters, is not 90%. So because it's like 85%, you're looking at more of a 3-to-1. So you could hit these streaks, right, where you could do really well with them. But it's statistically, you're not going to get this type of result for this particular pattern. But yeah, good catch there, Stephen. So let's look at let's get into this. You can see how it's kind of all over the place, right? If we said 3, yeah, that would work great, and we'd be in good shape. Here's another one where there's a chomp, and with the chomp, let's see, we got 4.2. That would have given us 3, right? Drawdown would have been 6.9, so we'd have to see which one went first, because a 3-to-1 would mean a 9 or a 7 or 9 pip stop. Actually, so we still had room if we did a 3-to-1 with a 3 pip take profit. All right, so let's go back and let's look at these same setups, and let's see, could we get more pips out of them if we're using other disciplines? So let's go to a clean chart first. So let's use just a few disciplines here. Let's just say, man, we picked a pretty messed up place. Okay, so we're at consolidation, and about the 112 to 113.8 range or so. This is Brexit right here. Let's see, 622. Yeah, I want to say it's like 400 and something, 500 and 517. Yeah, that's Brexit. 517 pip drop over the course of 4 hours. And then it just consolidated big time. Eventually we got some breakout, but it consolidated. So this is consolidation right here. This is rough. Man, we picked a messed up area. Whose idea was this? All right, so let's look at we could justify a lot of stuff here, but we could justify a long, because since the bottom right here, actually since the bottom here, we've only moved up, right? And we've made higher highs and higher lows. Right here we could see that's the case, except for right here, because we had a low here and we had a high that's lower than that high, so we could justify it down here as well, right? Because we have lower highs and lower lows for that range. See, do we have 3 touches? I have 1, 2, 3 on top. I only have 1, 2. Well, I do have 3, but it's all clustered. I want to see like a ebb and flow. So I want it to be like this. I want it to be like top, bottom, top, bottom, top, and then bottom. That's how I like to see my trends. That's how I identify my trends. I want to see the touch, the 3 touch, right? So if we use just this range right here, we're not going to get 3 touches regardless, because this is a lot of consolidation. I mean, we could force it, but I don't want to do that. It doesn't make sense. So let's just say it's sideways until it picks a direction. So sideways is tough because you could technically take it in either direction sideways, right? 50% of that. Or you could say, well, if I'm trading with the trend and the trend is sideways, it's consolidated, you can go either direction. You could be seeing a pennant as well. The bottom is flat. No, there's no pennant here. You can see, I mean, maybe on a longer term chart, yeah, we see a pennant, but there's just no, this is all just movement up. We could consolidate here. So if we're looking at a longer term chart, yeah, perhaps we would see a pennant, right, somewhere in here. And if we did see a pennant, just based on the movement, this would be the flagpole, which means the pennant would actually break down. But we're not going to base it on a pennant. Nonetheless, if we're looking at trend, we're going to say that it's sideways because that's what it's been for a very long time post-Brexit. And let's just look to see if we can find just some levels, reasonable levels of support and resistance. See, there's something right there. To find the bottom here. Something right in the middle right here. Oh yeah, I remember these levels were ugly. I did not like them. Starting to have flashbacks. Yeah, this whole range was a nightmare for support and resistance. The market was all over the place. Crazy stuff happening. And Brexit's a big deal. That's like that goes down in the history books. You know, that's big stuff. Yeah, ugly. All right, we won't get too ridiculous. 43256. Okay, good. Good. Eight, 6, 9, 2. Don't like it. Just this is getting ridiculous. All right, let's work with what we have. And we'll adjust as we go. Okay. All right. So here's our support resistance levels. We can see we're kind of bounced right in between one right now. We did say, let's see, the previous was a short, right? And if we're going short from here, we can see that we have 9.1, right? So if we're going half of that, we could see we could get at least 4.5 of that, maybe 5 pips. Give me 2 seconds, guys. Hang on 1 second. What's that? Maybe. Okay. Thank you. All right. So that one would have been all right, based on support and resistance. We could have probably squeezed out our 5. Would have been tough, but we would have squeezed out our 5. And would we have gotten it? Yeah, we would have gotten it, right? Because we got 9.4. We only needed 5 or 3 or whatever, right? But because we're using other disciplines, we could justify 5. So if we're using 5, then at an 85% win rate, right? So let's do the math here. Let me go to calculator. Let's say we've got a $3,000 account, win rate is 85%, and our stop loss is 15. Then we could use a minimum 3.8. So let's say 20. What if our stop loss was 20? Then we could do 5. So it's a 4-to-1. So let's say 80% then. Let's be really conservative. And let's say 15 is going to give us about 5 right there. So 15 pip stop, 80% win rate, and we could use a 5 pip take profit with a 15 pip stop. So it's 3-to-1. So that's pretty good for 80%. Okay. So we've got our 5 there. Let's look at our next one. Right here, if that is a true line support or resistance, we just broke below it. And if that's the case, then we're looking at about 23.6 to the short side, and we're looking for 5 of those. So let's go ahead and go for it for 5. And we get, what do we get on that one? Nothing, huh? 2.5? 2.5 and 9.3, so we can only go 15, right? This one's still telling us short, so we're still looking for a short. And from here, I think that's the one that lost, right? Because that one's 12 already. And there to there, let me adjust that. Yeah, nothing to the short side, nothing to the short side there, about 2.1 pips. So that one's upside down. Let's adjust this line because we did not stay below it. Next candle. So this one here, we're looking for, let's go back, sorry, we're skipping lines here, so many of them. Okay, looking for a short, that's right. If we were looking for a short, we only have about 3.2, so we'd skip that short, not doing that one, right, because we have support just below us. So we're still in this one because we had support higher, and now we've adjusted because it hasn't adhered to support, right? If it posts below that support level, we expect that it's going to go continue short to the next level of support. It didn't go anywhere short. That means that we want to adjust that line as we go because that was not where the support level was. And it was just a small break. So usually, you know, you can kind of account for that, but where we had a call on that, where it broke, we want to adjust that and make that right. Okay, so here we didn't take that one. Here, if we're looking at this, we have buy, 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 and if we're buying, then we have 5.2 pips to the long side. We would not buy that either. It doesn't give us enough room, so we'd leave that one alone. And that moved about 4.8, which wouldn't have been enough to get out of our 5 pip. And we don't have anything yet. We're still hanging out on this one. And that's 14.5 to the long, just a little bit long, and we'd be out. That one would be dead. So this would be a loser right here. Mark that loser. These we would not have taken. Let's go to the next. Right here we have buy, buy, and buy. So 3 to the buy side. And we have about, about 3.6 pips. We're not going to take that one either, right, because there's not enough room. And would we have gotten our 5? Nope, 4.6 to that point. Not to say we wouldn't have gotten it, but we wouldn't have gotten it right there. And there is about 6.9. Now we have a short, 1, 2, and 3, and we've got about 5.2 to the short side. Again, can't take it. Right, just not enough room. We need at least 10 pips to move 5. This one moves about, whoops, erase. So moves about 5.7. So wouldn't have been enough to get out of a 5 pip. We've got 1, 2, 3 short again. So we have about 4.1, 3.4 pips. Not going to take that one either. And whoops, erase. Okay, here we have 1, 2, and 3 to the long side, and we've got about 6.2. Still not enough to take our 5 pip. We need to get out of this range, right? So that would have gone 4.2 and then against. Here again we have 1, 2, and 3 to the long side, and we've got about 11.4 right here. We would take that to the long side hypothetically, right? I mean, I don't know that I wouldn't recommend just basing it on those unless it's, you know, a 3-pointer and you're using, you know, other disciplines. So I guess in this case where we have at least, actually we got almost a half court, right? Because we got negative 46, so it's under negative 50. And let me think about that. Negative 50, nope, it would have to be negative 51 or so on in order to justify a long for a half court. So this is not a half court. This would be just a 3-pointer. Because we have thick orange, which is in the fly zone, thin orange, and blue dotted. So thick orange and blue dotted are both giving us a long move, and thin orange is agreeing. So that would give us a 3-pointer with support and resistance. We know that we could see some drawdown potentially to this line that's been holding us for a little bit, about 4.2 pips away. But we'd be looking for, I mean, really it's slated for a 3 pip. But we could potentially, we do have room for 5 pips with 11.5 pips above us. So let's see if we get it. And that moves 3.9, not enough yet. Do we have another signal here? Buy, buy, sell, sell. Nope, so nothing there. And that moves 3.5, still not enough to get out. Let me adjust this, make sure. Yeah. Not enough to get out, We've got buy, buy, sell, buy. Blue dotted is not in agreement. So if we were looking for a 3-pointer, this would not be it, right? Plus we're at 0 on the thick orange. And so if we were looking for a buy, we wouldn't have any room anyway. There's only about 7.9 pips, and we need 50% of that to make 5 pips, and there's not 5 there. So that sucks because we are looking for some additional long, at least to 6.2 pips, in order to get out of this long trade, which we've been in for 2 hours now. And adjust. Nothing to the long side, right? And 4.2 was as close as we got to profit for 5 pips, and then it pulled back the other way. So we're not out of it yet because we've only gone about 3.4 pips upside down. We're 2.7 pips negative. It's gone 3 hours though. So you guys know my policy. If it breaks below this line, I would hedge, or I'd have a 1 pip take profit right now. So that's just my house. I don't know about you guys. Actually, I probably would have pulled out on that candle right there. All right, thick orange down, blue dotted down. So they actually disagree. So that would be one indication that we probably don't want to do that. Thick orange or thin orange is down, so 2 plus thick blue is up, which means down. So we have 3 down. We don't have enough room to short because support is just below us. So we're not going to short until we break out of that range, or we give ourselves enough room in one of those directions. So we're still in this trade right here. This one's still pending right here. So let's mark that and make it green because that one's still open. And now we broke support. This one right here is 4.5 pips upside down. Let me adjust. Yep. Let's see how far it went up. 5.2. That is just not fair. Look at that. We would have missed it by spread. That's probably our last chance. Look at this. Adjust. Yep. Missed it by spread. Wow. Look at that. 1 pip off of profit. Again, if it was Hiram, I would have been out right here somewhere as it shot up. Otherwise, if it hadn't, I would have hedged right there. All right, 1, 2, and 3 to the 4 to the short side from this point. Plus, we broke support. Right. So if we're using those other disciplines, then we would look to try to short that to the next level, and we obviously have room. So we have about 22 pips. So we'd look for a 5 pip short. Much to our dismay, because if we do short that much, that's going to put us about 10 pips, so we'd only have about 5 pips of room before we get stopped out of that trade. All right, so forward, and look at that. Did not do what it was supposed to. Let's see, did we get anything short? We actually may have gotten 6.7, so that would have actually filled. That would have been just fine. It did fill. Adjust. Oops. All right, let me erase that. What did I just do? Okay, yeah, so you see that this wick right here, or this shadow right here, would have got us out, right there, 6.7. So that one would have been fine, but that support level still didn't do what it was supposed to. It's not correct still, so we're going to adjust that yet again, put it about right there. And because we can see that after we broke below, it didn't remain down. It actually came back up and posted above it again. So unless we did go somewhere, unless there is like a level somewhere in here, we didn't see one, we didn't identify one, nor do we have enough data at this point to identify one. So we're just going to adjust that line and assume that's the case. Okay, now we've got, so we're still holding on this one. Let's see if that one would have panned out at that level, 8.7. Okay, so that one's good. That one filled. We didn't draw down. 11.2, we got close to a stop out at 15, and then we took profit. 5 hours later, garbage. All right, this one filled just fine. So now we're getting almost double the take profit, and we haven't missed yet, right? Actually, I think we did miss that one. Yeah, we missed that one back here. That red one right there. So these other ones would have been just fine. So that's 15 pips, and then we would have had here we'd have 5, 10, and 15. Or no, that's 10 because I'm double counting there. Okay. So we'd be about 5 pips down still. All right. Let's go forward. And oh wait, did we have anything right here? 1, 2, and 3. Yeah, we do. Okay, we've got 3 right there, right? Thick orange, thin orange, blue dotted. And we've got a half court because we've got negative 64, which is below negative 50. And we have blue dotted and thick orange both pointed up, or both agreeing to the long side. And then we have our thin orange that gives us our third point. So right here with support and resistance, with the pattern and measuring, we have room, 12.3 pips. We're only looking for 5 of that. So we go long. And there's our long, and that actually gives us a break even. So right now we'd be break even with our loss, unfortunately, right? 9.9 pips. Now right here we've got another setup. Thick, thin orange up, and blue dotted down. They've already chomped, and we're at negative 18, which even for a 3-pointer is too far, right? It's a no-fly zone. Now, if we're looking at just the points and support and resistance and the fact that we're in sideways, we have about 9.3. Let's call it 10 and see if we can get our 5. That would be 50%. Actually, be more like 60% of the distance between our current market price and our resistance, which should be a no-no. Plus, if we're paying attention to our values, that would be a no-no as well. Nonetheless, let's go ahead and go for it based on just support and resistance and the 3 out of 4 on the TNTs. And we get about 3.4 long, 7.5 short. We'd still be in that one. Thick orange, thin orange are up, and at 0, there's not enough room to take another long. So even if we did mark this right here, this would get a square because although it's the pattern, there's not enough room. We're still alive on this trade, but not profitable yet. And that should be profit for that one. 7.8. Yep, got our 5 pips there. Skipped that trade, which went 5.1, but we skipped it because it just didn't have all of the parameters that we needed. So it still hasn't gone 5 pips. I mean, it could, but it hasn't yet. So we've got thick orange flat, thin orange up, blue dotted up. So we don't have our 3 points here, 3 out of 4 or 3 or more points. And even if we did for a long, wouldn't be able to take it only a short. We don't have enough room for we don't have enough points for a short, so we skip that. Okay, we would not have gotten this because that went the other way. We do have 3 here, 1, 2, and 3, and we have kind of a half-court scenario as well because we got negative 38, which is below negative 50 or above negative 50, and we've got thick orange and blue dotted 2 out of 3 points. Thin orange gives us the third point, so that's more of a half-court scenario. Do we have the room? 8.9, the answer is no. 9. We could force it because we've got 9, but, you know, again, when the parameters aren't there, it's maybe better just to skip it. Nonetheless, let's go ahead and see what would have happened if we went for 5. And we got 6.3, so we got 5. It drew down about 3.4. So you'd have got your trade there, but it is still, you know, a little touchy just because of the range we've been kind of sitting in for quite some time now. Let's see, did we count? There was nothing there. Okay. So had we taken that one, so this one's actually good. That one took profit. Had we taken that one would have been profit. 6.3. Okay, 1, 2, and 3, and 4. So we actually have 4 right here, 4 points right here. And we do not have enough room to short. There's only 7.5, so that's not even 9, where before we were kind of pushing it with 9. That's only 7.5 to try to get. We'd need 3/4 of that to get our 5-pip trade in the range that we've been sitting in for some days now, between 12.432 and 12.274. So there's 4 for 4 right here, but we're going to skip it because we don't have enough room. And that one would have worked out just fine, but we skipped it. It went 22.2 pips to the short side. Okay. We've got 1, 2, and 3, and 4 again. 4 points right there. We're at negative 100, and we have room We do have room. So let's see what would happen. We know we could backtrack about 11.1 and 15 is our stop. So let's see, do we need a support or resistance level right here, or are we going to get the continuation that we expect? So let's go forward and see what happens. Technically, this would be the setup if we were not looking at the value, the thick orange value. If we were disregarding that and just looking at the 3-4 with support and resistance, then we would go ahead and execute. And that would have been a profitable trade. 10.6 and 8.3 drawdown. Statistically speaking, most of the time that's going to be the case. So adding support and resistance helped to put the statistics in your favor. But statistically is not 80 and especially not 90%. It just means it's above 50%, right? Statistically just means that more times than not, you're going to win that trade, which is, 50, 60, maybe even 75%. But are those the odds you really want to play with? The answer should be no. So adding support and resistance to something that doesn't seem appealing just based on the lines, using the lines as directionally, right? Reactively, not predictively, but reactively, adding just one other discipline has really stepped up our game. We still have only missed one and have hit every other one. So some of these we skipped because of our support and resistance and so on and so forth. And then there's some that we said, yep, let's go ahead and go for it because statistically, since they're pointed in that direction and we do have justification via support and resistance, that gives us the formidable advantage. So again, we're using other disciplines to justify our position. And sometimes even with that, you may not be comfortable with it. Now imagine adding pressure or major minor or trend. Well, actually, we're using trend. It's sideways. For any of these setups, and now you just have other forms of validation as to when to go or no go, right? And you can use them in combination with each other. So maybe support and resistance is iffy, right? Like this, right? Maybe it's iffy, but you have your 4 points, right? You have support below you, but you see that pressure has just changed positions. Major, minor are oversold, perhaps, maybe starting to cross and commit to the short side. So you can see other forms of validation that are telling you, yeah, this is going to work out just fine. Go ahead and take the trade, right? Or just one of those other things, right? Trend or pressure, or major, minor or echo or whatever it may be. You don't necessarily need all of them. Just another thing telling you, yeah, this is just fine. Because ultimately, you're not going to win all the time, regardless of if everything lines up and everything looks perfect and as it should be. You're still going to find those situations lose because that's how the market works. That's just how it is. And in those situations, all you do is make sure that you cover your tail, right? You protect your trades. You don't let a trade go 25, 30 pips against you without doing something about it, or at least considering doing something about it. Right? Definitely not 50 pips away, right? And definitely not to the point where you're using up more than what you've allocated for that particular trade. And never, ever, regardless of your win rate, more than 5%. Never, ever risk more than 5% of your account on any one trade. That's just dumb. It's dumb. Don't do it. For those of you that are trading at 1% growth per day, that's a week's worth of work. Imagine going to work at your job for a week, and then on Monday you do something that undid everything you did last week. You don't get paid for any of those days. You'd be lit. You'd be going to, the wage and hour board and complaining about your employer. Well, you are your employer in this situation. There's no one to complain to except for you. So that's bad enough. 5%. That's bad enough. Don't make it worse than that. That's it. That's all you risk. If you're risking more than that or you're not sure whether or not you're risking more than that, you're doing it wrong. Period. There's no argument. It's not my opinion. That's the facts. Facts are stubborn things. Argue with them all you want. You're still going to lose. It's a fact. It's just how it is. Okay. So let's go back to where we were. We justified that, and it worked out just fine. We don't have 3 points. Thick orange is up, thin orange is down, blue dotted is up. Actually, we do. We have blue dotted and thick blue up, which means down, and thin orange down, which means down, right? We don't have thick orange agreeing, but we do have 3 out of 4 saying short. Do we have room? 12 pips. Technically we do. Technically we do. If you're the type that says, you know what, I probably want to, I'd be more comfortable waiting for thick orange and blue dotted to agree than any of the other ones, that's fine. But we do have everything that we need. And these are maybe the situations where we find ourselves in where we have to make that decision. Okay, are we comfortable with this or not? Would I be comfortable with it just based on TNTs and the support and resistance lines we have? No. Doesn't mean it's not going to work out. I just wouldn't be comfortable with it. I would need another form of validation. But based on the rules that we're playing on today, all we wanted was 3 points and another form of validation. We have our 3 points or more, and we have another form of validation, which is support. So let's go for it. 12 pips. We only need 5 to the short side. And we get it. 8.7. Draw down 3.4. All right, so we got 1, 2, and that's it. To the long side, we do have a chomp. We have room, but we don't have our 3, so we're going to skip that one. And that chomp would have worked out just fine. Nonetheless, we didn't take it because it didn't give us what we were looking for. Now we got 1 thick orange, blue dotted 2, thin orange 3. So we got 3 points. We are negative 28 on the thick orange. So that's another thing. Well, I'll show you guys in just a moment, but because this is kind of consolidated. But we do have 3 points. Do we have room? 10 pips, just enough. So we need 50% of that with those 3 points for a long trade. Looks a little stubby. 2.2, 3.1 drawdown. We're not out of that one yet. We still need about from where we are. We need 3.5 pips still. Okay, 1, 2, 3. So we got another 3, but that's at 0, and we don't have enough room anymore. 7.8. So that one's going to get a square. Still looking for our long trade from here. That one's still alive. Let's mark that with a green square now because we've gone more than a couple candles. We don't want to lose sight of it. So we're still alive in that one. 15 is the stop out, so it's below support right now, which is a good place to be. Okay. 1, 2, and I guess we call it thin orange 3. So that would technically give us 3 right there. And that is about 10.8. So we do have 10 to the short side from this point. We're still looking for our long, but let's see if we can get that short. We do have room plus our 3 points. And we go 3.8, not enough to get out of that one either. So we're alive on this one, and we're alive on this one. Let's see. All we need is a little push short for that one. Whoops. 6.9, that one's out. This one is still alive. This one right here. And we got, let's see, was there anything on this one? 1, 2, 3. So we do have a short right here, but not enough room, right? So that gets a square. So that one would have come out 1, 2, and 3. Still not enough room. We do have 3 points, but not enough room. So that one gets a square as well. And let's see, that one would have gone about 4. Not enough, but we didn't take it anyway. 1, 2, 3. So we do still have 3 short. I don't think we have room. Let's check. 6.3, not enough room. Okay. We're still live on one of these trades, right? So it'd be this one right here. We know that our stop out was beyond support, which we haven't gone yet. We haven't gone that far yet. Adjust. See. So we're still live on that one. We got 1, 2, and 3 on this one for a long, and we do have room, right? We have about 13 pips, so we'd be looking for a long right there. And no go. 2.2, 5.1. So we didn't get that one yet. Still alive on that one too. Let's see. 1, 2, technically 3. probably don't have room if we didn't have room before. Yeah, 5.2, so no room there. That one gets a square. Let's see. Finally, we're at support. We had nothing we were waiting for support on, right? Except for the stop out. That one was long, and the one before that was long. We'd have to go through support to stop out the previous, and this one obviously is going to be through support as well. Okay, so let's go next, see if we get a big red candle so we can get rid of some of these other ones. Oh, not a big red one, but might be enough to stop us on this one. Let's check it. 15.5, so that's a loser right there. Okay. Broke support. Let's see if support works in our favor here. We don't have a short, right? Because we have up, down, down. Actually, we do have a short. Blue dotted, thick blue are down, and thin orange is down, and we have room. So we have about 10.8 pips to the short side. That would be enough for a short trade. So let's mark that and see how that goes. And we only need 5. That gave us 5.6. Close, but no cigar. Still need a little bit more. And we are live on that other one. And did we stop on that one yet? 17. That's a stopper too. Okay. All right. 1 up, blue dotted down, then orange up. So there's 3 to the long side. And we have about 5.2. Not enough. So we'll skip that one. Let's go forward. That should be enough to get out of that one, right? Erase. 5.2. No, it's not. That went 5.6. That went less. All right, 1, 2, and 3. There's 3 to the long side here, but we don't have enough room to the long side, so we skip that one as well. And that should be our out for this one. Yes, no? Yeah, 7.3. That's our out. Okay. All right, guys, so you can see that using some of these other disciplines are really going to help you, right? So, I mean, if we did, I mean, obviously you're not going to take every single one of those trades, but if you did, you'd get 1, 2, so that's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. That's 50 pips. Winner 15, 30, 45. Loser. You only won 5 pips out of that situation, right? So that means, I mean, just for this small range, you can see that, you know, it's not enough. It's not enough. But I mean, utilizing those other disciplines is really going to benefit you in making those decisions, those determinations as to whether or not you want to execute, right? Now, again, we're going to teach you TNT and some of those not nuances yet. So it's very foundational use, using support and resistance, and then mix it in with what you know of major, minor, or pressure, or anything else. Trend it works great with. Right, we just so happen to find ourselves in a situation where we didn't have trend in our favor. So let's go forward to, because I really want to show you guys that, because this is where it really becomes pivotal. Let me erase all this garbage. Let's go forward. This is 6/12/2017. Let's go to a clean chart. Let's find, we're already on a clean chart. Let's find an area where we're trending. So here you go. Here we know we're trending up. We see a lot of, we could pick probably multiple, right? So we have 1, 2, whoops. 1, 2, and 3 right there. 1, 2, and 3 on top right there. So we can see, well, actually, I don't have 3 on top. Oh, I don't have 3 on bottom. My snap, I hate that. Snap sometimes. All right, let's go until this finishes then. So I want to pick an area where we can validate the trend. There's your 3 on bottom, and we need one more on top. I could have validated an uptrend long before that. I'm pretty sure it would have been short term in multiple portions here, but let's look at a longer term. Oh, come on. There we go. Okay. All right. So I want to point something out about the TNTs. So let's go to only TNT. Okay. Now, this says negative 100 to the short side. All right, let's go back and look at that a little bit. So we went from like negative 9.3, and on the very next candle, which only moved about 8.2 pips, it dropped down to negative 33, and then on the candle after that, not even a lower low, and already we're down to negative 83. So you see how fast the thick orange is moving in terms of value to the short side, right? But when we're moving up, it's going negative 100, and then it goes negative 84. Mind you, we only moved about 5 pips, and then negative 43, which is about the halfway point, and then finally negative 9.3, right? So from where it started to there is like 10 pips, and then for the move back down, negative 33, so that's like 8.2 right there, and then 6.7 to that point, and already we're at negative 83, right? And then right there, negative 100, so that probably gave us about 13.7, I guess. So it wasn't too bad. A lot of sideways, but you can see. So I'll show you a better example. But a lot of times it'll go from a very high number on top to a very low number on bottom really quickly, right? And while it's building back up, it takes its time to build back up, which means there's more weight to the long side than there is the short side. So using things like 3-pointer or flat top or half court that utilize the TNTs, it's valid when you're trying to decide, okay, is this one of those instances where we're actually going to start pushing the opposite direction and going short because now it's starting to load up on the short, or is this just some give back, and the first instance we can see to start taking it back and going back to the long side, that's when we want to jump on that and do that, right? So you can see right there, there's your negative 100. We don't have our indication for a long yet. If we were basing it just on the 3 points or the half court, 3-pointer, half court, or anything like that, support and resistance. But pay attention to this thick orange value when it's down to negative 100 against the trend. We've already said it's a long trend against the trend. When it's tapped out, a lot of times you can see tons of validation justification to start going long. Matter of fact, if we kind of drew out that this range right here that we were in, we can see that's about the range that we've been sitting in, right? So if we go back here, we start looking at it like that, then we can see potential for a buy at this level, at this support level, right? So as we get to that support level, that's our opportunity to perhaps buy back into the opposite direction. perhaps when we get the signal for it, but nonetheless, right? If we start seeing that there could be some pullback on the thick orange, or when it's maxed out to the short side, as we get to this level right here, that may be your opportunity to position and go the opposite direction, right? So let's replay from this candle so I can kind of show you what that looks like. Okay, so not that one. We're going to go on to the next one. It's not actually this candle that we want to pay attention to. We can see how we're negative 83, so it probably wouldn't be a terrible idea, but let's wait to see if we can. I mean, we already know that it gets to negative 100, right? So we know that. So if we did choose to, say, append a trade right there, because we can see, okay, we've run out of gas, and so as we get down to this level, let's just go ahead and go long. So let's just say that that's going to be our plan, is we're going to go long right here with a pending order. So this blue line, 16,256, and we know we're consolidating. It looks like low volume, and we got about 10 pips. So let's only go 5 from here. So 16,306 and 318 if we're going to count, or if we're measuring, and we're going to count spread. So 318 is where we need to get from that line. 18. Whoops. 318. Once we touch that line, we're going to be in that for 5 pips long. Okay. Speed this up. It's 50. Let's go 500 times the speed. So right. Did we touch it yet? I can't tell with those other lines there. I don't know. We didn't. Okay. So we haven't touched it yet. Right there. Now we're in. We're in a long trade, and we're upside down about 3.5 pips to that point. So negative 100, if you're not in this yet, if you're not in it yet, that's where you're in it. This is kind of an insurance type thing, right? Because even if it doesn't go all the way back up from this point, even if we go back to support or resistance and it doesn't get above resistance again, we're still in profit 3.5 pips or so. And a lot of times a good support level is going to work as a resistance level, so the market's going to return back to it. So if you'd gotten in here, that's kind of like an insurance bet, right? Because even if it posts below this, you're still likely, pretty likely, not 100%, but pretty likely to return back to that level of resistance. I know you don't like them, but would this scenario make a pending trade sensible? Yeah, that's what we were talking about, Brad. We would have a pending at 16,256, so we'd actually be in a pending long trade right here. So as it came down, it put us in that long trade, and now we're 3.7 pips upside down, which is why I like more of the discretionary trade. But because we already knew that it was going to go to negative 100, that's kind of cheating. So I said, you know what? Based on what we could see right there, let's just say that we decided let's just pen a trade at 16,256. So 16,256, and our exit would be 16,306. But we put this line to 16,318 because that's where the market has to go to get us out of that 5 pip trade. Okay, so let's play. All right, so right there we're still upside down, and right here we're upside down again. So right here we're profitable. We haven't taken profit yet, but we drew down a good 6.2 pips to try to get 5 pips, right? So we're only looking for 5. So still waiting on that. There we go. There's our profit. But look at how much more it moves in our favor though. So had we shorted, right? Had we just continued to short, we'd have gone about 9, 8 pips. But going long from this position right here, we went, about the same. So not too much different quite yet. Okay, so let's look at, let me speed this up. Okay. All right. So again, let's look at, so if we're saying uptrend, then we're going to put more weight on these than we are the short, the ones that are moving short, right? So Thick orange up. Actually, let's see, blue dotted down. Thick, nope. So let's see, we don't have 3 there. So let's erase that. Okay, thick orange up, blue dotted down, thin orange up. So there's 4 right there, but thick orange is at negative 0.7, so almost 0 on the money, right? Now, if we did decide, okay, we're just going to go ahead and do it anyway because we have our other forms of validation, resistance is actually too close, so we probably wouldn't have done it anyway. But let's see if we can give ourselves some room here. Obviously, you don't want to try to justify. I know that some of you guys might do this and you don't want to. This is a very bad idea, but we're going to do it in this instance just to see what's going to happen. I would not recommend, as a matter of fact, I wouldn't recommend taking this trade based on these parameters, right? Your thick orange is too far overbought, even if you're with the trend, but we also moved our resistance level to justify our reasoning. So we said, well, I need room, so maybe I could justify my resistance level being higher, right? And there's 18.5 pips. That's not to say that it won't fill. We could still very well get a fill. We do have pressure in our favor, right? And we have, or rather, trend in our favor, and we have 4 out of 4 on the TNT saying buy, and we're only looking for 5 pips. So yeah, we get the trade, right? And sometimes that's the worst thing that can happen because then you're just, again, you're convinced that that's going to work every single time. And that may not be the case. So you want to be conservative. But you can see that with trend, these lines are going to be a lot more aggressive with the trend than they are going to be against the trend. And it's difficult in sideways when you're getting sideways movement because TNTs are more reactive. They're quicker to they're reactive and they're quicker to be reactive. Sometimes you'll get what looks like a good signal to the short or long side, but because you're in consolidation, it doesn't move very much. And that's the problem that you run into with TNTs when you're using them reactively versus predictively. Predictively works a little bit easier because what you're going to do is just wait for the thick orange to get maxed out to the short side when you're in a uptrend, right? Or vice versa, when you're in a downtrend, you want it to get maxed out to the long side when you're in a downtrend. So if we're trending down right now, this would be the opportunity to really get in and possibly, stick with that trade, right? Because you're going to be able to take more of that. You're not going to have to wait for the 3 points, especially if, let's just say, for example, we executed on this trade to short, right, with the downtrend. This is not a downtrend, by the way. We're just saying hypothetically. So we're wanting to short. And as we're shorting, the market moves short. And let's say we're going for, let's just say, 10 pips. And we've moved 8 pips and the candle ends, right? But the next indication is now thick orange down, blue dotted up, thin orange down, and we got 3 points, half court. We know that we can get at least another 3, plus we have room to resistance for another, say, 10 pips. That may not be a bad instance where you just set like a 1 pip protection. In other words, set a stop profit 1 pip away from your entry. So if it does come back, you get 1 pip, you don't lose anything, but perhaps try to ride that out a little further, right? And maybe not just go for your 10, maybe go for 15 or 20 or more. If you can see the trend is still down and you can see that you might be able to ride that out for a while and trail it manually, absolutely go for it. But you want to have those other forms of validation. You don't want to just try to do that every single time because that kind of stuff will bite you in the butt. Better take the bird in the hand, right? But if you can lock in some profit because you have other forms of validation telling you it's going to continue short, far be it for you to just, to cut and run, try to hang on to that and get more out of it. How would that affect, if pressure were a strong short, even though the trend is long, how would that affect such a trade? With pressure being short when these are maxed out, so pressure wouldn't be in this particular instance, but let's just say hypothetically that we're in an uptrend and pressure was strong back here short. And we have indications to short on TNTs. With just TNT and pressure, I would strongly look at a short. If we were right up against support like this, I would consider what the next level support is and try to trade the distance, 25% of that distance from here to whatever 25% of the next level is. And if I could justify a trade there, I'd take that, with pressure being in my favor. But pressure would have to be strong and new. In other words, if it was pointed down both short and long term, but it had been that way for 3 or 4 candles, I'm not going to trust that. I'm looking for the flip. I'm looking for the long. I'm not expecting that pressure is going to just continue that way. I'm looking for it to change positions. Yeah, when the thick orange maxed out long, say like this, you're probably, well, you could, it would probably look like this. The candle would probably look like this. So thick orange maxed out long, pressure short, strong pressure short, new pressure short. Let's say that pressure just popped, green popped on bottom of red here, and they're both pointed down, and then here softened a little bit. This is positioning, especially if the thick orange went from whatever it was to maxed out, 85 or greater. Yeah, I'm shorting right there. Yep. Yes, Brad, absolutely. And again, if we're up against support, I would either, I mean, if we pulled away from support, I would expect to return to that level of support at least. If we're up against it, I would expect that we're going to break through it and go to the next level, even if it's just with shadow before returning. That's what I would expect. Good question, Brad. Okay, so you can see with trend, even though we're maxed out, we still get that push, right? And we did get digression on the thick orange value because it went from negative 0.7 to now negative 2. But we only moved up. We barely moved down, right? So again, where's the strength? The strength is in the long, and that's where the market is trending. And so all the rest of the stuff is going to be, you know, soft and give back. So wait for your position, right? So again, let's wait for the max out, right? We're maxed out, most definitely right there, right? But if we were waiting for that positioning, well, we positioned on, I want to say the shadow or something right here. I can't remember exactly. And then we drew down, right? Maybe 6-7 pips. And then we moved back up into profit and took profit, right? And then we could do the same thing again later on as we pull back away from profit, right? So right here, let's go back here, play. So watch this. Look at this, negative 80, right? So again, right in that range, 80, 85, especially up against support and things like that, that's where you really want to consider going the opposite direction, you know? Let's go 500. I know it's going to happen quick to the short side, but let's wait for it. Ah, yeah, it already happened. So right there, right, that's where we're looking to go the opposite direction as it gets into those. But look at how it posted before was negative 75. At the post, we're at negative 80. Just a small move down gave us 85. I probably went right over it. And then that would be your opportunity to say, okay, now we need to start looking for the long. That's how you can use them predictively versus reactively, right? But you need to master that. It's not something you can just, it's not just like a cut and dry principle, right? Because we saw that even though we went negative 85 or what have you back here, as we drew to this level, and then penned a trade to go long, it still went short quite a bit, right? And even though it was only about 7 or 8 pips from this point, during high volume times, that could be 27, 37 before it comes back, you know? And so you don't want to, you don't want to risk that. You want to use, when you're positioning like that, perhaps use a 5-minute chart. Wait for the 5 minutes to get vastly oversold before you execute. Otherwise, wait for your next setup. Toward the end, will you update us on the perfect storm and half top? So we don't have back testing on those quite yet. Let's look on. I know that it's all looking good. The half top we haven't gotten too far with because we're working on perfect storm right now. I've got one of my guys that's been out, which is why we haven't touched it. But let's look at what we had last week and this week before we go. We'll wrap up with that. Let's see. Let's do this. Okay. So last week would have been 520. So let's go back to 520. So we've got, let's see, right there would be a Stormy D, right? So we've got the 30-minute that posted double cross pointed up oversold for a long, and then the 60-minute posted 30 minutes later. So there's your Stormy D. So then we'd use our 5-minute, wait for it to oversell or just arrive oversold before we went long. And it has to happen within 60 minutes. So 5, 10, that probably went oversold right there. Let's replay it. So we just need it to arrive. We don't need it to post. And if you want it to post, or you're looking for a nice, if you know how to position with the 5-minute, you probably want it to post and give you the signal. Otherwise, you're just executing as it arrives oversold. I'm more partial to waiting for the 5-minute to finish its run and then flip. But if you don't know what to look for, then it's better just to wait for it to arrive oversold and then take the long. That's how it's tested thus far, and it's tested really well thus far. So let's make this, speed this up by 10, and let's pause as those get oversold. Come on. Nope. Come on. A little bit more, a little bit more, a little bit more. There you go. There's your oversold right there. They've just arrived oversold. So right there would be your entry if you're not doing anything more in terms of positioning. So this is your entry. And Stormy D, we're looking for 5, right, Tim? Stormy D looking for 5? Okay. So let's play that. Go back here. Fast forward. Let's go forward. Okay. So right there would be our entry. We're looking for 5. From there to there is only about a pip. And then that's 3. And that's 4.2. That's 4.7, not enough. Brings us 1.7 upside down. Oof, 7.6. That, what was that? 6. Okay. That brings us back to profit. 1.3. Some more whipsawing here. 7.9. Come on. Do something. 7.5. 10.2. Already a miserable trade. 14.6. 25.4. That's a stopper. No go. How about that? Okay. Let's go back to that. So Stormy D didn't work out, right? At all. I mean, we had some draw. We capitalized on most of that draw, but it just wasn't enough to get us out. So we went from there to there, which is about 4.8. So we just missed it by spread pretty much. And then it came back and ate our lunch. That's all right. It happens. Let's look for the next one. So this one is, nope, no go there. Yeah, 2018 was rough for Perfect Storm and Stormy D when we were back testing. But it still proved out, at least from what we started counting. So we're going to finish the count. Okay, here. So we've got Stormy D again here. So we'd be looking for the oversell on the 5-minute. So 5. And it's got to happen within 60 minutes. 10. So that would have been like 5 free and clear at first. 15. Nope, no oversell yet. 20. That would have oversold on the post. So right there. And then you'd have got 6.3 here. I'll show you what I mean. So right there, it's not oversold, right? So I'm going to replay this from right there. Play. I'm going to fast forward it. Because during that candle, I don't think we got oversold. So let's go 10 times the speed. And we may have, but I don't think so. Let's just check it. But I know for sure that at the post, as the lines extended, they would have been oversold. So, let's see, no oversell. Not yet. Nope. Nope. Still waiting. Okay, so watch this. 3 seconds. I'm going to slow this down. Right at the post. Right there. Oversold. See? So you guys know I'm not making stuff up. So there's your entry. Right as it posted oversold. And then kind of moved a little bit, almost immediately. Then you'd be looking for 5 pips long. And so that means you need about 6.2. Let's put that up to 20. And there's 6.3 from the end of that candle, even though the line that we would have got in was probably a little bit lower. There's 6.3 from the end of that candle to the new, so that one would have worked out just fine. Okay. Let's see. All right, let's go to the next. Ooh, another Stormy D. We've got miners 30-minute crossed hard and aggressive right here. Probably an announcement, it looks like. Yeah. So we probably wouldn't have taken this one. And then 30 minutes later, the 60. So still, let's wait, see what happens with the 5-minute. We'd need for it to oversell within 60 minutes or 12 candles. So 5, 10, 15, 20. Oof, that may have done it right there. If not, the post would have oversold. So either way, it would have been on the end of that candle, 25. So let's mark it from here. 6.2 short. We need a long, right? 30. Let's see. So that moved about 13.9. Our stopper is 25. Let's back in our direction. 5.1, almost there. 7.1. So we got that one. That one would have worked out just fine. And let's see what else we got. Oh, here we go. Almost. Still another Stormy D. These happen most often, right? So we need to overbought on the 5-minute. So 5, 10, there it is. Probably happened right there as it was forming. But we'll take it from here. And we need a short for 5 pips. That moved about 4.1, 2.1, 6.5. There's your profit. And let's go to the next. Whoop. Right there, perfect storm. Just barely. Gosh. That's rough. All right. Well, we'd be looking for a long for 5 pips right here from this point. And there it is, 6.5. 1.5 drawdown, 6.5 to the long side. We got that one. So what are we, 3 for 4? 3 winners, 1 loser? Right there, another Stormy D. So we need that one to oversell. 5, 10, 15, 20, 25, 30. I don't know. I think that probably would have. Let's replay that. So let's see if we get oversold here. If it's going to happen, it's going to happen at the post. Let's see, come on. 50 seconds, 40 seconds, 30, 20, 16, right? Nope. Still didn't happen, not even at the post. Okay, let's see where the oversold happens. So let's go 20. So this is 30. That candle is 30. 30 minutes in. Right there. At the 35-minute mark. So let's play that. So right here, and we're looking for 5 long. That goes 13.5 almost immediately against, makes up ground. .3, pretty close there. That's 4.6, close, no cigar. 7.2. Uh-oh. 17. 21. 24.2. There it is. 28.5. So that one wasn't nice either. Okay, let's look for the next one. You got to consider time of day on some of these announcements, things like that. So there's a ton of stuff that could have transpired in some of these. Oh, let's see. There's another stormy D right there. So we'd need oversold, and that should have happened at the end of that candle right there. These would have extended and then crinked up, especially as that happened. I'm not going to replay it. It's just taking too long. You can replay it if you'd like. There's 4 right there, and then there's your 6.1, so that one would have filled just fine. And then nope, close, no cigar. Nope. And that brings us to current. So we had about 5 winners and 2 losers in that time, which is we wouldn't have needed 10 winners or 9 winners and 1 loser to be at 90. So just for those 2 weeks, we're actually closer to like 75 for that range. But again, when looking back, taking into consideration, would I have even taken this trade? It's during an announcement, things like that, and the likelihood of you taking some of those is not plausible. Now, for those of you guys that are seeing a lot of success with these, with the perfect storm, I can see just based on your chats and based on the comments that you guys have made to me, you guys are being really aggressive with positioning with your 5-minute. And I notice that sometimes it's causing for you to miss, and other times it's causing for you to be able to take more than just 5 pips. So hats off to you guys. That's awesome. For those of you guys that aren't to that point yet, those guys get that way by back testing this stuff. They take these indicators backwards as far as they can go, and then they start clicking forward and looking for the setup. When they see the setup, they mark it and they determine, okay, would I take this right now, or would I use the 5-minute? If I did, when would I decide to execute on the 5-minute? And they're getting really familiar with what to look for, not just the parameters, but also the market conditions and so on, before they decide just to go half-cocked and try to master this. So let's look at the 50%er, and then we'll wrap it up with that, guys. If you guys have any questions while I'm looking at this 50%er, let me know, and I'll address those. Let me just build myself a 50. I think maybe I already have one. Let me look. Yep, I do. Okay. Half top. Okay. All right. So let's go back on this and look at the from the 20th, see if we got any for the half top. on the 60-minute. Half tops don't happen nearly as often. I'm showing nothing on the half top. Hold on, let me try to go back further. Maybe I don't have this thing right. Nope, I don't, because I don't see any. Okay, hold on one second. Let me adjust this. Let's see. Oh, there's nothing in there. Ha. Maybe that's why. Let's see. Oh, that's okay. I remember. Okay. That should give them to me, I think. Yep. All right. There we go. So right here, here's your half top. So from the 20th, which is the beginning of last week, Sunday a week from this last Sunday, we had one right. I don't know if that's all we had, but we have this one where we've got green candle, -50 flat. So this is our half top. So we would short. I want to say we're starting off with 3 pips. We're hoping for more, but we're starting off with just 3 pips. This one went 16. It went 10 up, but also went 16. If we track that candle by candle, let's see if we got our 3 before we got any drawdown. 3. So that went about 10. Nope, we got our draw before we got our fill. But nonetheless, it would have been a successful trade. And then it was followed by a Hydra, so that was pretty cool. And then, of course, we know that we got that Hydra because of the size of that previous candle. Okay, let's see if we have another one in here. So you can see how frequent they are. They're very infrequent. If we go back to, say, the beginning of the month, so let's just say the beginning of May 2018. Let's go forward. What are we calling half top, Tim? 3 pips? Yep. So there's your half. Red, 50, -50, flat. So we'd go green for 3. And that draws about 12 and then goes 26.1. So that one was successful right there. Will you clarify for the half top, does it require 2 periods in a row closed at -50? That would be the half top, yes. So you can see right here -50 on the thick orange value. And then the very next candle, it's also -50, but it's flat. Great question, Bryce. Flat, -50. That's the only way it's actually flat, by the way, is this has to be -50. Because if it's not, then this next one would not be flat. It would be angled up or angled down. So if this was like -51 and then this one was -50, then that would be angled up. Believe it or not, yes, it would be angled up. If this was -49 and this was -50, this would actually be angled down a little bit. But both the previous and the current have to be flat, or -50, and then this one has to be flat. The very next candle we go long for our 3. So we got that one. Let's go to our next. Whoa, 2 in a row. Here we go. Here's the real test, ladies and gentlemen. All right, so right here we long for 3, right? Because we have a flat -50, and there's our long, and that is 10.7 with about 1.8 pips drawdown. And check this out. It stayed flat and -50, so now we go short. And money, look at that. 5.8, we got our 3 pips there as well. And another Hydra, look at that. Actually, it's not a Hydra. Pressure was not in our favor, but still reacted the way we expected. Let's go to our next. And let's see here. Oh, there we go. So that is red, -50. So we'd be looking for a long for 3. And this one only went 1.2 and 10.8 against, and then gave us profit. So it made us sweat, then it gave it to us. Next one. What is that? Our third now? 1, 2, 3, 4. That's our fourth now because we had 2 in a row. Our fourth. That's our fifth, and that one worked out, right? I think that's the first one we looked at. So we got 5 this month. And so that's like 1 1/4 per week. So not very much, but it worked. We hit all 5 of them, right? So we're 100% this month on the half top. Cool stuff there. All right, guys, I'm going to end it with that. I want you guys to really pay attention to some of this TNT stuff that we talked about today. Use it with trend. It works really well with trend. So right now we're more in a downtrend than anything, right? So we're in a downtrend. So look for those opportunities when the market is going to short on us. Look for those 3 points on the TNT. Mix it in with some of the other stuff that you know, and see what you can do. If you guys have any questions, as always, feel free to reach out. And I appreciate your guys' time and attention. I'll look forward to talking with you guys tomorrow. Have a good night. Thanks.